Hey guys, Mike here. So we got a huge week ahead this week with NVIDIA earnings, with Jackson Hole and everything, with the Feds. We're going to have to see if NVIDIA can obviously meet market expectations. And then what they say at Jackson Hole, how hawkish the market seems to think they sound, things like that. But also, you know, keep in mind, we're going to go over something very important. Obviously, yields are pushing higher, right? Like the 10-year is a big one that's been pushing. But I'm going to show you something that is affecting the 10-year, three things that you might not be aware of. And so, you know, that has nothing to do with Jackson Hole, basically. So just keep that in mind. And then we're going to go over some stock charts that, you know, if these things play out, then it's going to be a major push down for the market, right? Obviously they don't, you know, we do get the bounce because they don't always play out, then everything's fine, but you need to be at least aware of it, not going in blindly. But, you know, starting off here, I'll show you more money just continues to flow into these money market funds. I mean, this right here was like $37 billion coming in there last week, and you can see obviously over the last 3 weeks this has been moving up. And when you look at a long-term perspective of the 10-year, there's actually a chart I have that goes all the way back to the 80s. But it was in this downtrend just for pretty much decades. And obviously this is a big breakout, retest, and then of course it's been up here for quite a while now since the Fed's been raising rates and stuff. But this is important because we talked about this last week. Here we are at this key level, which was the October high. And of course it did exactly what we thought it would do. It rejected, okay? And because I told you, it's like any other stock chart. When this thing gets overbought, it's like a stock, we hit a major resistance level, we tend to pull back. But then there's that trend line right there, because remember, it's still, since May, trending up, right? So keep that in mind. The reason why this is important for those who understand, if I go in here and I just throw, you know, the SPY over this, which is the ETF for the S&P, you know, here's where you see the disconnect, right? Where the market just went on this pause rally. The Fed's going to pause and ignored rates, okay? And usually the bond market's right. But normally it's an inverse relationship. Yields go up, stocks go down, especially high beta stocks. Okay? They get crushed. And so just keep that in mind right there. And, you know, maybe we'll get back on track. We'll have to see. Obviously, now you see the market is trending down and yields are still trending up. But if there is even a short-term push down in these yields, that actually is a tailwind for stocks. And when the yields are moving up, it's a headwind. Okay. Now, this is what I was sharing with members. This article I found, which says, you know, the reason why you might see inflation coming under control, but yields are still moving higher, is three reasons, three things going on. One, you may not agree with this, but obviously strong economy. And what I mean by that is every time the recession keeps getting pushed off, it's supposed to be 2022, then it was 2023, now it's being pushed off at 2024, yields will move up, okay? And obviously it's because everybody still has jobs and stuff like that. So that's one reason you're going to see that. That's why the Fed keeps raising rates, which of course is what's affecting yields, okay? The other one, and this is a big one, and it's all about supply and demand, okay? Recall that bond yields rise as prices fall, and when supply of something increases, it weighs on prices. And what is the Treasury doing after draining their account? Issuing $1 trillion worth of bonds this quarter alone, and then another $852 billion next quarter is the target. So that is another thing. It's pushing bond prices down, which means yields go up. Bond prices go up, yields go down. So inverse relationship there. The other one, you see in other central banks, right? Bank of Japan. So what they do? In a surprise move, they lose control of its government's bonds, which sent those yields higher, making them more attractive to domestic investors at the expense of U.S. treasuries. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so it's important to understand that you have these forces at work that are things we probably don't think about on a daily basis, right, with these yields. And so yes, yields could continue to go higher. I mean, until it breaks that resistance line at the top there and actually breaks out, and most likely what you're looking for is a breakout, come down, retest, and bounce, right, like you saw in the long-term trend and everything. And so that means that will be, oh yeah, that's going to be a breakout, which should not be good for the market. That's if the market decides not to disconnect from reality again when Jackson Hole happens and go, hey, did they say they're going to pause? I think they said they're going to pause when they never said that, right? And so again, the market can do whatever the heck it wants to do. That's just how it works, because there is still a lot of money on the sidelines. There's a lot of other countries, their freaking economy is even worse than we are, and so their stock markets are terrible, so they're going to put their money somewhere, right? They don't want to just sit in there. And so they're either going into those money market funds, collecting their percentages, going to the treasuries, or they're going into the U.S. stock market. So, just keep that in mind. Now, some things that might play out, might not play out, we just need to be aware of them, is one, you got the QQQ. As far as I'm concerned, when I look at this, does that look like a head and shoulders to you that's starting to play out? And maybe this right here is going to end up being the right shoulder right there. So if that plays out, we should see more of a short-term bounce, then a bigger fall down, and it would basically lead us to fill that gap right down there below if I'm just eyeballing this, of course, ends up coming out correct. So keep that in mind. Another one's going to end up being NVIDIA. This is another one. As far as I'm concerned, I look at this, they report this week, obviously, and they better freaking hang the moon on that earnings call, by the way. Because if they don't, you can see major gaps down below, right? No support because they moved up so fast. When I really was looking at this other day, I thought that was like a rounding top, first of all, instead of a rounding bottom, which most of these stocks have done. And then the other one was, when I looked at it even more, I thought, man, that looks like a head and shoulders trying to form, right? That's trying to form the right shoulder, doesn't it? And so it'll get very close to forming that right shoulder by the time they report earnings this week. And then, of course, drawing this down to the shoulder line, I would think somewhere actually into that gap's where it feel. And then if we go into TradeView and actually look up the head and shoulders indicator, you can see that's exactly what would happen if that played out, obviously. And so we'll have to see, because obviously the Grim Reaper would have to come for NVIDIA for that to happen. It's coming for all the other big mega caps. But again, it's all about the earnings. Because what have we seen? We've seen companies hit top and bottom line, not downgrade the guidance, but maybe not raise it, and the stock still gets crushed, right? Because what are we in now? We're in a lot of selling pressure happening right now, right? So the earnings being perceived aren't actually getting rewarded. And so they could come out and, hit top bottom line, hit the forecast, and maybe they don't raise and the market goes, woof, and then they say what is true is, which is, hey, we have a supply constraint issue. When you have one company that makes the majority of chips, that company can only do so much, right? And I know they're trying to build a plant in Arizona or whatever. That'll take years, okay? And so, we'll see we got to see how the market's going to perceive it, right? Doesn't mean NVIDIA did anything wrong. Has nothing to do with that. It's just moved way up. Now, if they come out and raise guidance again, it should go up, right? And if it gets a bump, what's it going to do to all semiconductors? It's going to raise the tide. That's what happens. One goes up, they all seem to go up together, right? And it could raise the market, whether that's for a short-term bounce or just getting us back on track to keep going this uptrend. We'll have to see. Again, it's a huge, there'll probably be more people in that earnings call this week than any earnings call over the last, I think, 3 years at least. Seriously, it's a lot riding on it, that's for sure. And then speaking of lifting boats, then you got Tesla here. And Tesla, understand on the weekly, you got a bearish MACD cross, which we haven't seen in a little while here. So we're going to see how this plays out. It doesn't mean, you could get one of these where it hits and it looks like it's about to cross, but it goes sideways, and then you get a big pop up. That pop right there was 42%, right? So keep that in mind, but then you get the ones with the real bearish MACD cross, and then boom, it ends up selling down massively. The other one is, when you look at this, what I'd like to see is a little divergence on the RSI. When you look at when it's going on these rallies right here, what you'll see is lower lows, but on the RSI, you're getting higher lows, right? So it's kind of telling you, hey, I think we're getting ready to make a turn here. All right, and you see this across the board, almost every single rally it's been on over the last at least year or two. Same thing, lower lows, higher lows in the RSI, and then bam, big move up. Then you come over here, same thing, lower lows coming through here, higher lows, big move up, right? Double-digit moves every time. Come over here, it's the same thing, lower lows, higher lows in the RSI, massive move. And so, here's another one right here, boom, lower lows, higher lows, and we take a big move up. And then when you look at this right here, same thing, lower lows, higher lows, and that's about a third, 30 to 40% move right there? Yeah, 35% move. And then you look where we're at now, and you're not seeing that. You're seeing lower lows, and you're seeing lower lows in the RSI. And so it's something I would like to see. It doesn't have to happen for this to move up, right? It's just a divergence that Tesla has seemed to shown over almost every single rally over the last 2 years. Again, doesn't mean it has to happen for this to get a bounce, because there's a lot of confluence right here in this area, right here around the 208, 210 area, if it continues to drop down there. So Palantir, no surprise. What we've been talking about for weeks. got the breakdown. I said if it loses that trend line, we're going down to 15. If you lose 15, we're going down to 1370. Where we go to? 1370, got to bounce. If we lose 1370, of course, how do I know that? All I do is look at the volume profile and stuff, some other things, and how overstretched it was. And again, what are you going to see here? If it loses that 1370 or 13-ish area, we're going down between like 9 to 1050, somewhere in there. Right, that's pretty much what's going to be on board to happen. And because you look at the weekly, there's just, I told you, there's just not a lot of support. Right, when you move up fast and you leave no support, no consolidation, everything else. If you're a long-term investor, you want to see consolidation at this area. It'd be the best thing for you, and you can quit riding this freaking roller coaster. Until then, it's going to continue to be a major roller coaster until you get that done. But let's see if it can hold 1370. Okay, SoFi is another one, right? When you look at this one, I always talk about this. Major move up. What happened though? Ends up falling all the way back down to 8 again. Why? Because that's where you got support at, right? Once it broke around 950 to 10, you knew we were coming down. If it breaks this, we're going to be going down to around between 725. That's really your next support. And understand, that's a stage 1 trying to break into a stage 2, and now it's down 35%. So from that rise. And so, again, you can see the volume gaps. If it continues to break down, it's just because it looks just like Palantir, right? When it moved up so fast, even though this one at least has a lot of consolidation in this area. But you can see where the major support's at, around $6.50 to $7. That's where the major support's at. And so, and we're not far from that. And Meta's one of those ones, I mean, we just got to see what big money wants to do, because this is one of those ones you pull up a weekly on, and you can see, I mean, this thing could have a ways to fall if that's what they want to happen, right? Because look at that meteoric rise. And, you know, getting down to around 270-ish maybe, somewhere in there, which would put it around the 100 moving average. Again, you see on the weekly what's going on with the MACD. You're getting a bearish MACD cross. And so, you know, yes, this one could absolutely fall if they want to get in at a cheaper price. And, I mean, you can go all the way down to 230, 235, somewhere in there. And then AMD, of course, got to that 102. What we talk about? Got to bounce, right? Got to bounce at 102. Doesn't mean it's out of the woods. Absolutely, as you can see, can head down probably 97-ish, somewhere in there. And so keep that in mind. It's really where your real support's going to be at. But we'll see if 102 comes from here. A lot of this, like I said, it depends on NVIDIA. If they hang the moon and that stock starts to skyrocket, you know as well as I do, all of these chip stocks, or semiconductor stocks, excuse me, are going to just absolutely roar back up. So keep that in mind. It could continue to sell off until then. But, you know, just keep those levels in mind, okay? They're not made up levels or anything. Now, Google actually has held up better than almost anything. Why? Because it didn't have a meteoric rise. It didn't go on some 100% move or anything. And you can see it's back in that supply area again. And so it can definitely move down to around 120-ish, somewhere in there. But this is just one of those ones. It moves up slow. It moves down slow. There's nothing exciting about it or anything else. And so, you know, we just got to pay attention to this one. There's nothing sexy about it or anything else. I shouldn't have drawn a trend line there, because that's actually what I'm looking for, an ascending trend line right there. If it breaks that, it's a whole different story. But right now, it's one of the few that's it still ain't below its 50. It's not below its 100. It's nowhere near its 200. Now, earnings, obviously, you got some high beta, but a lot of retailers. You got Zoom's going to be on Monday. Then on Tuesday, Macy's, Lowe's, Dick's, BJ's. Then you have a home builder, Toll Brothers. Let's see how that works out. Then you're going to end up with Urban Outfitters. Then on Wednesday, I can't believe Peloton's still in business, but I guess people are still riding those bikes. Advanced Auto Parts, Kohl's, Foot Locker, Bath & Body Works, still going. And then the big boy, Wednesday after close, you're going to have NVIDIA. You also have Snowflake, Splunk. Most people are just going to be paying attention to NVIDIA, right? But you also have Autodesk as well. And then we got some more retailers on Thursday. Dollar Tree, Burlington, Petco is going to be another one. And then you'll have another semiconductor in Marvel, and then a firm high beta stuff, right? Ulta Beauty, that's that one, it actually flies like a freaking tech stock, believe it or not, but it just sells makeup, right? Intuit, Gap, Nordstrom. And then when it comes to economic news, don't worry about Monday. Tuesday, Richmond Fed manufacturing, people do pay attention to it. I don't think the market's going to react off of it or anything. Ton of home builder stuff going on, S&P Global Compensation, Global Services, things of that nature. Then you're going to come into the 23rd, and that is Jackson Hole right there. Symposium's going to kick off. And so I don't think Jerome Powell speaks then. I think it's the next day. When you go into the 24th, all the job data is going to come out. Chicago Fed national activity is going to come out. And then you have the Kansas City manufacturing, which people tend to pay more attention to. And then obviously Jackson Hole Symposium goes on for the 24th. And then on Friday, because this lasts for 3 days, you're going to have Michigan Consumer Sentiment. Let me go ahead and tell you right now that stuff is going to be negative because what happened? The market is going down, right? But then you have Jerome Powell speaking on Friday to wrap things up. So we will get to learn from all of these retailers, how are we holding up, right? Are we still burning up the credit cards, the smoke coming off of and everything? We'll have to see. I mean, I just went down to the Walmart in our area and that thing is just packed out still, right? People loading the grocery cart. So, I mean, you know, right now, I know it's hard to believe, but again, it's just, we got so many factors. I sit there all the time writing this stuff down on paper, pros and cons of what's going on in the economy, what's doing this. And so again, we're not going to really know what's going on in the economy until student loans kick back in. That's just the way it is. You cannot add $250 to $500 to millions of households and not be in effect as far as the consumer is concerned, right? So, but again, what can we do? We can just keep running up the credit cards. That's what's going on. Okay, keep taking out debt, more and more debt. So, you know, again, we'll see what happens on that. Let me know what you think about NVIDIA. What's your prediction? You think they're going to hang the moon? You think big money's going to come for them, trying to push them back down, get them at a cheaper price? Let me know what you think, guys. I always appreciate your opinion and stuff. Thank you guys for all the feedback on yesterday's video about, you know, the answers, and I'm reading your answers to other people and stuff like that, and learning some stuff myself, especially when it comes to the real estate industry. And I will be coming out with a video on that as well, and let you guys kind of look at that. So, because a big bet was made on that, so I want you to know about it. So anyway, hit the like and subscribe button if you got anything out of it. Really appreciate everything, guys. Share the video. Join it for the membership if you want to in the bottom. 7-day free trial, less than a McDonald's combo. So, all right, I hope you guys have a good Sunday, and I will see you tomorrow.